Are you ready to take charge of your finances and pay less tax, all legally? Stick with me until the end of this video, and I'll reveal powerful secrets that will keep more of your hard-earned money in your pocket. Let's dive in. Did you know that the richest Americans often pay almost no income tax? Take Warren Buffett, for example, one of the wealthiest investors in the world, who actually pays a lower tax rate than his secretary. Interesting, right? Now, I encourage you to chat with your accountants about your own tax strategy. If you don't have one, don't worry. I'm here to share some valuable insights that can help. And if this video saves you money, treat yourself. Whether it's a nice meal or helping someone in need, it's always better when that money stays in your hands instead of going to the IRS. Let's make your money work for you. Invest strategically. I've been diving into investing lately, and I want to share why it matters. Investing isn't just a strategy for building wealth or beating inflation. It's also a smart way to lower your tax burden. The best part? Anyone can start investing, regardless of their financial background. You don't have to be a millionaire to reap these tax benefits. To really maximize your gains, think long-term. If you buy a stock and sell it quickly for a profit, you miss out on the lower tax rates associated with long-term capital gains. Holding your investments for over a year is crucial to unlocking these rewards. Consider this. When you earn a paycheck, you face state, FICA, and federal taxes that can significantly cut into your income. However, if you invest wisely and wait it out, you could pay little to no taxes on your profits, depending on your income level. This means you could keep much more of your earnings compared to regular income. Imagine reaping substantial profits from your investments while only facing a capped tax rate on those gains. By investing smartly, you're not just growing your wealth, you're also keeping more of it in your pocket. So why wait? Start exploring your investment options today. Maximize your deductions. If you want to maximize your deductions, hiring an accountant could be your secret weapon. These pros excel at spotting every potential tax deduction, helping you keep more of your money. For business owners, side hustlers, and independent contractors, the landscape of deductions is rich and rewarding. Unlike traditional employees who earn, pay taxes, and then spend what's left, you have the power to spend first and only pay taxes on what remains. This strategic advantage encourages you to invest in your growth and embrace new opportunities. Think about it. Your cell phone, laptop, meals, and travel for business can all be deducted. Plus, under Section 179, if you invest in a heavy vehicle for your business, you can write off the entire purchase price in the same year instead of stretching it out over several years. While there are some limits and exceptions, this provision can lead to impressive savings. In fact, my accountant suggested that, as an influencer, owning a BMW could enhance my brand image and potentially serve as a deductible expense. Imagine driving a car that not only boosts your reputation, but also offers tax benefits. Unlocking tax savings through business ventures. If you come under the mid to upper income bracket as an employee, consider transitioning to a contractor role instead of sticking with a W-2 position. As a contractor or small business owner, you'll gain greater flexibility and access to valuable tax deductions. If a full transition isn't feasible, think about starting a side hustle. Business expenses are tax deductible. For example, if you earn $100,000 as an employee, you'll pay taxes on that entire amount. But as a business owner, you can deduct necessary expenses first, meaning you only pay taxes on your remaining income. This can lead to substantial savings compared to traditional employment. There are numerous deductible expenses you might not be aware of, such as mileage, equipment, marketing, and supplies. You could even create a business around your passions, like a fishing business that allows you to deduct expenses for gear, bait, and boat rentals. Just be careful with the hobby loss rule. If your business doesn't turn a profit, the IRS may classify it as a hobby, and you could owe taxes on your earnings. To avoid this, you need to demonstrate genuine intent to profit within a few years. Once your business is thriving, you might still face a hefty tax bill. Basic deductions or 401k contributions often won't make a significant dent in your tax liability. While having a high income is fantastic, writing large checks to the government is never enjoyable. This is where real estate shines. Many investors believe all paths in business ultimately lead to real estate, as it offers substantial tax advantages. A significant part of the tax code focuses on real estate, providing key strategies to help you reduce your taxes effectively. Let's dive into those. Tax breaks. This is for all the homeowners. Ready to uncover some amazing tax breaks? This is an amazing strategy. First up is the capital gains exclusion. Lets you sell your primary residence tax-free on profits up to $250,000 or $500,000 if married, provided you lived there for at least 2 of the last 5 years. So if your home's value skyrockets, you could keep all those gains. Next, if you own rental properties, consider the 1031 exchange. This lets you defer taxes by reinvesting in another property, allowing you to level up your investments without immediate tax hits. Don't overlook depreciation. This allows you to show paper losses while enjoying real profits, potentially saving you thousands of dollars. And if you really want to maximize your benefits, look into cost segregation for accelerated deductions. If you need cash without selling, refinancing can help you tap into your home's equity tax-free. Just keep an eye on those interest rates and wait for the right moment. And here's a hidden gem. If you or your spouse qualifies as a real estate professional, you can offset your W-2 income with real estate losses, which could drop your tax bill to zero. Just make sure you can back it up with proof of hours spent on real estate activities. HSA. Health savings accounts, or HSAs, are a game changer for anyone with a high deductible health plan. Imagine having a special savings account just for your healthcare expenses, one that not only helps you save, but also cuts your taxable income. That's right, when you contribute to your HSA, it's like scoring a tax deduction. Think of it this way: every dollar you put in can be used for qualified medical expenses without the tax burden, allowing you to spend pre-tax money. There's more. You can also invest the funds in your HSA, and any earnings or interest you earn will be tax-free. So, not only do you save on taxes, but your money can grow too. It's a smart way to take charge of your healthcare costs and keep your finances healthy. Capital losses. Here is your unexpected ally for smart tax benefits. What they are: a capital loss happens when you sell an asset for less than what you paid. How to save on taxes using capital losses. Point 1. Offset gains. Use losses to reduce any capital gains you have. If you made $10,000 from selling stocks but lost $4,000 on others, you only pay tax on $6,000. Point 2. Deduct from income. If your losses exceed gains, you can deduct up to $3,000 from your regular income, lowering your tax bill. Point 3. Carryover. Any unused losses can be carried forward to future years. In the end, it's clear that many people are drawn to the idea of legally lowering their taxes, but it requires a smart approach. Think of it as a strategic game where knowing the rules can lead to significant rewards. By skillfully utilizing deductions, credits, and exemptions, you can navigate the tax landscape like a pro, keeping your finances healthy while staying on the right side of the law. If this video helps you save money, consider treating yourself or someone else. Please subscribe, and thank you for your support. Have a wonderful day.